It's not just the ETF, in technically speaking, because any of those institutions will have to restrict their investment into SEC compliant projects. To me, that's what I'm looking for in my portfolio, is to have as many SEC compliant crypto assets.
On today's video, we're joined by Patrick to talk about the 2024 narratives. He's not just the former general partner of a 10 million crypto fund, but also the current CEO at Smooth.fund, a market making as a service infrastructure. What projects is Patrick looking at?
If you look at my list, I have more than 25 decentralized file storage that I identified so far.
What are his predictions for this upcoming bull run?
My fully diluted market cap by the peak of the bull run, maybe 2025. I'm expecting maybe.
You don't want to miss Patrick's list of projects. He won't just tell us what he's looking at. He'll tell us why he's looking at these specific verticals. Patrick, are you ready to share your portfolio with us?
Indeed, I am.
All right, great. And again, this is just your personal opinion. None of this is a fact. So everyone definitely do your own research, but we're going to look at his portfolio and we're going to dissect it, maybe pick it apart, maybe question some of it, but it's going to be very educational. So make sure to hit that like button, subscribe to the channel, and let's get started. Let's talk about like some of the narratives that you anticipate. Obviously, the biggest one from a macro perspective is going to be ETFs, right? And that's just more on the Bitcoin side. And many of us are expecting that that will, create a certain spark in the market and potentially impact other areas of the industry.
Yeah, exactly. So in terms of the ETF, it will be the very first, I would say, crypto cycle that large institutional investors, pension plans, and all that stuff move into crypto. So that's not something we've seen in the past. And I think the amount of billions coming from them that will be poured in there will be pretty massive. So I think that's a narrative on itself. It's not just the ETF, in technically speaking, because any of those institutions will have to restrict their investment into SEC compliant projects. So that's something we've discussed a little bit in the past, but to me, that's what I'm looking for in my portfolio, is to have as many SEC compliant crypto assets. That's a narrative.
So it sounds like what you're saying is you're not just looking at the tech, but you're also investing from the perspective of being SEC compliant, because you feel like this institutional buy-in will have a large impact on some of these even smaller cap projects.
The institutional investors might not necessarily invest in the smaller cap projects, but some investors like myself realize the potential either this cycle or next cycle. So we want to front run them, basically. So I think that narrative will grow significantly this time around. And the thing is, there's not that many past crypto projects that follow the rule correctly, so that restrict their ability to get listed on Coinbase and being exposed to eventually those institutional investors. So that means that a lot of very new projects that just will be launched in the next little while have the best chance to be SEC compliant. So that's something to look for. And that will be across other narrative. So if you find some AI, decentralized AI technology that is SEC compliant, then it's a double whammy, basically. So you have double chance to grow significantly.
Got it. So I see some familiar names in your portfolio, and some of them not as obvious ones. So let's go through this. Bittensor, we talked about Bittensor before. What do you think it's going to do in 2024?
I think it's far from being over in terms of growth. For me, my fully diluted market cap by the peak of the bull run, maybe 2025, I'm expecting maybe 100 billion. So right now it's oscillating a bit, but it still has a ton of room to grow for at least a 10x. And because of the way that they launched their project, I would believe that it should be SEC compliant. So this is why, for me, I'm putting a larger chunk of allocation. Right now, I'm maybe putting 15% in that one alone, but I may reduce that to 10 or 12% as I add more project. things will slow down. And I think that's a big layer one. But there's other project building on Bittensor that I will be looking for. I haven't found any, but there's Corcel we've discussed and used in the past. But there will be other projects like that that build on Bittensor, and those will be very early on with a much lower market cap. So I think I will want to allocate some of my maybe 15%, take some profit for Bittensor, and once those projects launch and get ready and that are at the right stage, I'll basically take profit from Bittensor and move that money into those early stage projects on Bittensor. And then getting deeper into the bull run, I'll probably take profit from those projects and put it back in Bittensor at that point. But the exact strategy will evolve over time. But I think to me, I want to go hard on the high risk stuff early on, and then move out of them into more lower risk over time, and then eventually move out of the crypto industry entirely.
Patrick, how much development is actually happening right now in Bittensor? You did show me that one application, and it helped me find my cookie recipe, I remember. But are there other projects? Are you seeing other applications on top of Bittensor, or is it still very early?
It's still early, but yeah, there's other projects that are being built on it. I haven't dig deeper because in the past 2 weeks, I was investigating decentralized file storage optimized for AI. So I haven't found any of such project on Bittensor yet, but I suspect there will be. Meanwhile, Jackal, uh, it's one that is on my radar right now, and I spoke with the team like in the past few days. So I think this one will do really well, and this is part of the Cosmos ecosystem.
Yeah, I've spoken to the team before as well. I will say, to play devil's advocate here, some people say the whole decentralized storage space, it's not sexy, and there's a lot of competitors there. How are these projects, like, how are they differentiating themselves? How should we, either as investors, right, determine which one is going to be the one that could succeed, or even as a builder, right? If you're considering building a decentralized storage solution, how can you stand out from some of the other ones? Because there seems to be a lot of different ones, and maybe we can go over some of those main ones that we recognize in the market.
Yeah, the thing that it's a database at the end of the day. So you have to decide what kind of data you're going to be storing. Is it the time series data, for example, like price of crypto assets, or it's like more text type of stuff, like a blog post or some sort of document, PDF, or maybe it's just social media interactions. All of those things will matter in terms of how the database model is structured. And do you want this to be used for just file storage, so to power a website, or it's to process that information and transform it using artificial intelligence? So for me, I have a much more interest in terms of AI processing. And with the thing, for example, when we talk about Corcel, this is not time series data, it is textual data. So you need a specific type of database to do that. And when you train a model, and that's still the data is stored somewhere in a database. And then the longer it takes to train the model, the more costly it will be. So because there's more computational cycle involved and all that stuff. Uh, so you want something that will be fast to access the data and will have a large amount of bandwidth for data transfers. So you need a database system that is optimized for that because that's what AI technology needs. Meanwhile, the other important thing is that if you want to compare your model to optimize it, you need to be able to train it on the same data. And that means that versioning of the data itself and having a fixed data set is important. So you need to be able to track the right data. And if someone add data on top of it, then you might reduce your reproducibility of your data model, like your AI model. So then it makes it harder to compare when you're trying to optimize it to get better kind of prediction power. So that's something else you'll have to look at. So we can discuss a little bit in terms of if you compare file storage between Web 2 world like AWS or Google Cloud or other aspect like that versus decentralized file storage like Filecoin, the cost of storing data on Filecoin is vastly inferior to storing data on a centralized database. But the thing is that Filecoin was optimized for long-term storage, and we qualified that more as cold storage.
Mm-hmm.
And that means that it's not really fast or high bandwidth of transfer. So it's not really optimized that well for AI technology. Jackal, what is interesting is that it's much more costly than storing data on Filecoin because it's like $8 per month per terabyte. But it's hot storage, meaning that it's meant to be not necessarily stored for very long term, but it's more good for when you're training your AI model and when your model is operating in like live with clients, then you need to be able to store raw data as well. So I think that one might be a good one that is optimized for AI. I still have to dig a bit deeper on that, but and then it's part of the Cosmos ecosystem. It's the only real data decentralized file storage on the Cosmos ecosystem that I found so far. Because most of the one that I found, and I think if you look at my list, I have more than 25 the decentralized file storage that I identified so far, and most of them are on the Ethereum ecosystem. I found one that is on Solana, one on Cosmos, and a few others that are their entirely own chain, like Arweave and Filecoin. But yeah, that's why I think the Jackal might be of interest. And
What's interesting about your list, I'm just looking at Bittensor, Injective, Jackal, Say, all four of those ecosystems, all four of those projects are in Network Spotlight, which is a community that I run. So it's very interesting, and I don't know if this has anything to do with it, but you get to know the team, you get to understand a little bit about their methodology, and as an investor, that really helps you understand how talented is the team. And I imagine that all of these, Patrick, and you correct me if I'm wrong, but you're looking at these as long-term investments?
uh, long term until the peak of the bull market, because the thing, a lot of the early stage project, like for example Jackal, their token is already traded on the market, and I don't think they necessarily protected themselves entirely from a bear market. Most projects haven't. So if you look historically, exclude stablecoin, most projects that are early stage lose between 80 and 90% of their price in the bear market when things crash. And like even Bitcoin last time, it lost like 60% of its value. So no project currently are really protected against that. And it's partly the fault of market makers, but it's yeah, some of aspect. What I would think is maybe the real world asset, like asset back tokens, might actually survive better in a bear market, but they will not probably grow as fast either. So right now, I don't have real world asset token here, but as we get deeper in the bull run and we get close to a potential crash, that's probably where I'll store quite a bit of my capital instead of going all of the way into USDT. Real world asset could be one area of interest at that point.
Recently I had Paul of Agile Dynamics on my show, and his focus is primarily around operations. And he was just saying how a lot of these projects, they're aiming to succeed for for the bull run, and then after that, it just disappear.
Yeah,
There's not a really solid business model there because the tokenomics can only take you so far, and a lot of them don't really have like a very strong like business experience there. Do you feel like that is the case? I mean, can these projects, if they truly have something valuable to add, can they sustain, their growth even beyond
yeah.
the market crash?
But I think that a lot of them will crash 80 and 90%, but they will recover. And the good project, the next bull market, the all-time high will probably be bigger. So if you think really long term and you don't want to play around, you could always keep your money there. But the thing you have to accept that on paper you might lose 80, 90% of your value in the next crash. So but a lot of project like for example Jackal, it takes time to build good technology. It's several years. So sometimes it takes more than one crypto cycle to achieve that, especially for a layer one. So I think you don't have to necessarily sell everything. You can keep some, but I would definitely reduce my allocation when we get deeper in 2025 and then go back to buy back after the crash.
Got it. Okay.
If you're solving a real problem, things will get back. Like, for example, graph, it's on here. It's on my radar. Because it was there in the last bull cycle, as far as I remember. Yeah, 2021. See, it went up quite a lot. It crashed, but I would suspect it would fully recover. And at 18 cents to, yeah. So that's more than potentially a 10x if it recover the lost ground, and I think it probably will. And the thing graph come into the AI narrative at the same time. It's much more on the Ethereum ecosystem. That's why I would like to find some equivalent to graph on Cosmos and on other, like for example on Bittensor. That would be really nice to have.
Okay, so let's go in order now. Let's back up a little bit. Next on the list, I believe you have Say or C.
Yeah, and this is more like a TradeFi, DeFi, and it's a competitor to Injective. They are both built on the Cosmos ecosystem, but personally, I kind of prefer Injective a little bit. But the thing is, I've
Well,
made
is
that
that,
mistake.
I mean, that's kind of easy to say right now because Injective has the momentum, right?
Say has momentum too. Like they are both very close to each other in terms of market cap and all that. But the thing is that I've made that mistake before of putting my capital into one specific project across kind of a narrative that I liked, but it ended up being their competitor that did a lot better. So if you believe that the narrative of TradeFi DeFi is going to be good, maybe split between the two, especially if they are both around the same size, because we don't know which one will perform better. It's more about execution and business deals to get customers and all that. It's not just yeah. I think there might be problem with the technology. If it happened to be too injective, then Say could skyrocket at that point as the community of injective moved to Say, or vice versa. It's really hard to tell those things. It's risk about specific projects, so you want to diversify out of that. So I would probably consider putting in a little bit of both. But I do prefer injective compared to Say personally. As the ETF of Bitcoin get approved, I think a lot of the proof of work chains will do well. And I think Caspa is an interesting one there. So
let's talk about Solana because obviously Solana has been on a tear.
yep.
Many people are predicting that Solana would be, top 3 in market cap. There's
Yep.
already some notice from institutions. Kathy Wood is now talking about Solana. From a development perspective, I talked to a lot of people close to the Solana Foundation, and there's a lot that they're working on. They're even onboarding traditional developers. They're building out tools to help onboard traditional games to kind of get over the hurdle of building in Web3. So even Kathy Wood says follow the developers, and a lot of the developers are looking at Solana. Personally, I am an investor in Solana, so of course I want to see them do well. Just full transparency there. But in general, there seems to be a lot of excitement around Solana and what it could do. What are your thoughts?
The potential fully diluted value, I would expect that it may go to 600 billion. Right now it's at like 46. So I'm expecting more than a 10x from this point. There could be problem along the way, but if you look at their market cap, last time they went to a price of $250. And the last bull run, they went to basically 150 billion. So I'm expecting 4 times that amount this time around. But last bull run, it was their first. So I think their technology stack was not fully ready yet. As you said, there's lots of developer building application on it. Rollbit is the one that is the biggest crypto casino right now on the crypto market, and they are built on Solana. So the more application like Rollbit that built on it and do well, that means that it's a lot of growth for Solana itself as well, especially that Amazon and Visa have a partnership with Solana as well. That's why I think it's really not impossible to go to 4 times the size of the last bull run in their case. So I would expect pretty well.
Why do you think that a casino player like Robit, why do you think that they chose Solana? Is there like a strong need for fast transactions in their
Yeah,
particular model?
yeah. It's like if you have a lot of customers and you want this to be saved on chains, uh, for a crypto casino, there's the issue with the regulation and all that stuff. So if you don't want to be shut down by the government, like using a decentralized blockchain makes it a little bit better to a certain extent. So I would say for a crypto casino, Solana for the speed is good, but ICP, because you can run the entire stack on chain, that's also another big plus. And meanwhile, there's also Tokenomics on Telegram for crypto casino that could be interesting. That if you can play a simple crypto casino game on Telegram itself on your phone, that makes things a bit easy. So I would say that the crypto casino on Solana, on ICP, and on Tokenomics might be doing pretty well because it's a good match. I would say good synergy.
With with Ton, it's very surprising to see them being so high. I mean, I don't I don't hear too much about them,
I know.
but
Yeah.
they make a lot of noise in terms of their growth. But from a development perspective, I don't hear too much about them.
Yeah, but it's interesting. I looked a bit deeper at it's kind of like if you're building a mobile app, either for Android or for Apple, um, you can build a Telegram app that run in Telegram, and it's not just your simple chat. It can actually launch something a bit different with some CSS. Like you have access to something a bit more sophisticated than just a chat system. So that's why you can deploy application on top of Telegram that way. So that to me that's interesting. And now that they have two wallets, one custodial and non-custodial, that is straight up available on the Telegram application, it makes things quite easy to integrate and build application and access the 55 million users that Telegram has. So I think that's why it will do well. So
So the other thing, going back to your portfolio, just looking at the next thing on your list is Ethereum. And
yeah,
Ethereum, to me, I think that they're going to have their moment to shine once they have the Cancun upgrade. I think that's going to take some time, but I think it will create,
yeah,
it'll spark some, it'll generate some buzz. I think we saw some layer twos do well recently, and I think that that narrative may continue once they are able to lower their transactions uh, and be able to scale and be faster. But I see that you only are allocating 5%. Is
yeah,
that more because you just want to take on like newer projects that may be potentially more risky, or like what's your
exactly.
thought process on that?
I think I would prefer to invest in a lower cap project because we're early in the bull market. So, and putting them, let's say, my Graph is one of them, but I'm looking a lot at social file, and a lot of it is being built on Ethereum with Lens. So I think that might be one narrative, and the gambling that's based, that's one that I allocated some money. I'll be looking at more projects like that that I think will have good growth and are part of the Ethereum ecosystem. And as we get deeper in 2025, then I'll probably take profit from a lot of those things and move it into Ethereum itself. But I don't want to exclude Ethereum. I put only 5% of my capital, but meanwhile, because I do trust Ethereum and the stability of it, I will be taking leverage to buy some of that. So that means that I can, like if I take a 3x leverage, my 5% allocation become 15% in terms of amount. So that's
Right,
how I
and
can
definitely leverage
get
isn't
more risky.
something for the beginners to do, right? There's a lot of risk that comes with crypto in
Yeah,
general and specifically around leverage. So definitely not financial advice once again,
exactly.
but do your research and but this is very interesting, Patrick. It's nice to kind of get a sense of, we talk about projects, we've done a few reviews already, and here we have the opportunity to see it more of a 30,000 foot overview.
Yeah,
Continuing on, looks like you have Aave, which is very traditional protocol as well. It's from, I mean, I'm not even sure when they originated, but I know they've been around for a while, them and Compound as well. Curious to know why you chose Aave over Compound.
Because I'm a user of Aave. The good thing about Aave compared to Compound is that you can take a loan and you don't have to pay back the capital. You can just pay the interest. So you can keep your loan active indefinitely. With Compound, as far as I can see, you cannot do that. So to me, I prefer to use Aave as a customer, which is why I also prefer to allocate some capital there. Uh, And it's we discussed taking leverage on Ethereum, but alternatively, another way you can do it is that you can buy a lot of Ethereum, go on Aave, take a loan on your collateral of Ethereum, and then you use you're basically the USDT or whatever you took out to buy other projects that are more risky. So this way you don't have to take leverage. You increase your level of risk doing it that way as well. So for me, when I do that, I don't take more than 50% of my capital value. This way, the risk of Ethereum going down by 50% is relatively low. Usually, when there's a dip in the market during a bull run, it's around 30%, typically speaking. So with 50%, I have an extra buffer to not be liquidated, basically. And then as the price of Ethereum goes up, then you can take a bit more loan to allocate more. So this way, it's not exactly like leverage. It is leveraged in a sense, but it's not like leverage when you take a 3x on a crypto exchange. So that's another strategy
Got it.
where you can increase your allocations. Um,
And I'm also seeing something part of your strategy is Gamblify. Here's another project that is focused on Gamblify. So
yeah,
what is it about Gamblify that's really interesting to you in terms of the narrative?
the, the biggest reason is that it's easy to make money. If you're a casino, the house not always win, but pretty much always win, and you can collect fee of everybody that lose money. So it's kind of immoral to a certain extent, but a ton of people in the crypto industry are gambler by nature. I'm not one of them, but I think that's not something you can remove from the industry. And casino in general do really well, and that's why usually it's managed by governments. And there's a ton of stuff that government don't want to allow other entity to do lottery because it's a good tax on your people and your citizens. So if the government are willing to do it because it's so much good revenue, having a crypto casino where it's the community that own those projects, because the thing, the revenue, there's a portion of it that goes back to buy back the token and all that stuff. So to me, that's why I think crypto casino, the revenue stream is really well defined, which is why government love to manage and own casinos and lottery in the first place. So that's why I think it's a strong a tokenomic model that have a really strong revenue stream attached to it. So I
And
think
so why are you specifically looking at based games?
because it was a very low market cap compared to Rollbit, and I think Rollbit is the biggest one. So I expect Rollbit to probably grow into a $10 billion market cap this bull cycle, and right now it's below a billion. So I think there's plenty of room to grow, and the revenue stream. I think if there's a crash in the market, okay, a lot of people will not have the money to necessarily gamble that much anymore if there's a crypto crash. So they'll probably be correlated with the bear market, but uh, this is not going to disappear. People will be gambling for the rest of humanity, most likely. So base game was one that I thought just came into my radar. There's tons and tons of them. I'm probably going to be diversifying to more projects. It was really high risk, but very low market cap. When I started investing in it, it was at 8 million. So it has more than doubled since then. Yeah, I think it will do well because I would expect this one not to catch up to Rollbit, probably not, but it should do still pretty well, maybe a tenth of it. So it's probably higher growth than Rollbit itself, just because it's so small. So that's the reason.
There was a there was a Gamblify project, I would say like last bull run that was extremely successful at the time. I remember seeing them at conferences, and then all of a sudden I think they just collapsed. I think it was called
Yeah.
Poker, if you remember.
Yeah, I've never really looked into that in the last cycle.
Yeah, they were very successful. I mean, I don't know, maybe somebody can correct me on this, but I don't think that they're really um I'm not sure what happened to them, but I imagine just GambleFi as a whole. Obviously, nothing's ever a guarantee, right? You're talking about casinos and how well they do, which you would think would translate to some of these projects doing well, but I don't think that necessarily applies to every project. So you're still taking a massive risk here,
Yeah, yeah.
but you're just looking at what the potential payoff could be for doing that.
Let's think in terms of base, I just put 2% of my capital here.
Right. And then moving on, I see you have Polygon here, but there's no allocation. Is that
Yeah, it's just to keep an eye for it, because the problem with Polygon is that they are being labeled as a security by the SEC, unregistered security. So they're in trouble, but Ethereum is not. So, and there will be an ETF of Ethereum, but not of Polygon, at the moment at least. So I think that's why I think Ethereum will grow faster than Polygon. Even though the Polygon market cap is a tiny fraction, typically speaking, if Ethereum grow 1%, Polygon should grow 2 or 3%. But in this case, because of the ETF, I think it might not be necessarily true this bull cycle. It might be true right now until the ETF get approved, but I'm not sure it will last like that. So that's the
Polygon
reason
is some,
I didn't put an allocation there. But I still want to keep track of this because Polygon, like there's Arbitrum and Optimism. Those are the three main kind of layer two. Um, and yeah, I think Polygon is especially with the ZK technology, it's really interesting. But I'm not sure it will grow that much like crazy, just because it's been labeled as a security. So it may have a bit of a resistance because of that.
something that Polygon has been doing really well that a lot of the other chains have not been able to crack as well, in my humble opinion, is the ability to collaborate with traditional brands. Now, I think we're starting to see some of that with like Avalabs, meaning Avalanche. We're starting to see some of that with Solana and AWS, Visa, and Spotify, like all these different collaborations. Even even in Ethereum as well. But I feel like Polygon has really got that nailed in terms of taking really highly reputable brands from the
Yeah,
eyes of the consumers and be able to collaborate with them. And that's something that I haven't really quite seen done as well with the other chains. So if Polygon can overcome the regulatory landscape situation, then I do believe that they have the opportunity to do well. And yeah, full transparency, I do own Polygon as well, or
yeah,
Matic. So no financial advice here, but it could be a good year for them.
yeah. I think for me, based on all those arguments, I would expect that it could grow relatively at the same speed of Ethereum. So then it's a decision, do you want to go with Polygon that has a much lower cap and maybe it can overshoot, or you go with a tried and true uh, because if you get this relatively same amount of growth, maybe you can split between the two just in case. But I think the ETF, it's money that is unrelated to customers because for them it's more like a store of value. And that's the other thing is that when the crypto markets start to crash, the ETF and the new rules, the gap rules that we discussed the other day, the Bitcoin and Ethereum could sustain and not suffer much of a downside compared to other projects potentially. So
Now, Patrick, can you give us a brief overview? Because you've got a few other projects here, and although uh, you're looking at them, but you haven't invested in them yet, can you give us like a brief, quick overview of what they are, so that way we can move along to the rest of your list?
yeah, exactly. So they haven't launched their token, that's why. So this will be very early stage. Social Fi, no, it was tried last bull cycle and really didn't manage to take a market share from traditional social media system. But for example, Favor is a competitor to Twitter. T2 World is a competitor to Medium. I think it will be very hard to compete against Twitter because Elon Musk is really pro crypto. So I think they will have their own crypto kind of mechanism inside of Twitter pretty soon. And they applied to get some licenses for that. So it's coming. So that's why I'm not sure I'll put money in favor, but I just want to keep track of it in case. And Medium, one of my blog posts was flagged recently on Medium, and my account was frozen for 1 day. That's not fun to experience. So this is why I think having a censorship-resistant, decentralized Medium is something of interest. And there's been Mirror, there's been a lot of other competitors to that, but this one will be new. And Lens, it's more like a way to kind of build your relationship and your social graph. Uh, and then this is what many of the other projects are building on top or connecting at least into Lens protocol. None of those projects have been launched in the market, so that's why they're on my list to keep track of. And I started today to post some stuff on T2 World, for example. So we'll see how it goes, but I really think SocialFi is something that can attract as many users as GameFi, but cost a fraction of the development. So
Yeah, I
this is why
remember
I'm
you told me
really,
because you also are an entrepreneur. You've launched projects yourself, so I know that you look at
yeah,
both sides of it as an investor and also as a builder. And I remember
yeah,
when we were discussing the possibilities of FriendTech coming back and re-emerging. You mentioned to me that SocialFi cost-wise is a fraction of what it is to build a AAA game.
exactly. So, and that's thing, it can attract a ton and ton of users. Like how many users Facebook has again? Like 4 billion or something like that. It's
Yeah,
crazy
something
amount of
insane.
users. Yeah, exactly. So games can kind of attract as many users, but it costs so much more to build a quality game that will attract that amount of users. So that's the reason why Social 5 for me is more interesting than Game 5. And there haven't been the success in Social 5 on the market just yet. There's some early attempt and some scale really fast, but then eventually collapsed. But I still want to look into potential investment there as they come along.
Got it. And I see Arbitrum, and they've
Yeah,
been very successful as of late, but you don't have
yeah.
them on here either. Is that for the same reasons why you are not looking at, I mean, you're not invested in Polygon yet, just from a security perspective, not really sure what the outcome will be
Uh,
there?
it's just because of the ETF of Ethereum. I would think that I can use maybe a 3x leverage on my 5% allocation, and then I can do better than potentially the other one. And when the market crash, because let's say that the market dipped 30%, that could be Ethereum that dipped 30%. But what happened to Polygon and Arbitrum if Ethereum dipped 30%? It could suffer a lot more. So that's the reason is that drawdown, the risk is higher, in my opinion, for Arbitrum and Polygon, but I might not get that much better return. That's my fear a little bit. And that's only because of the ETF. Because I think the market may dip, but the pension plan that will put money into Ethereum and Bitcoin, they're probably not going to be moving their money and doing day trading at all. They're going to put their money there for the next maybe 10, 20 years. So, so it's a very
Mhm.
different type of mindset in terms of investment. And that means that the volatility will reduce quite a lot because of the sheer size will be that much bigger.
Got it.
Ocean Protocol is not a decentralized storage, but it's a decentralized data marketplace. So it kind of functions relatively the same, but technically speaking, you could have various sources of storage, even Web2, like AWS, that use Ocean Protocol to kind of resell the data between participants. I think it will do well, but I didn't put an allocation for that reason. I prefer to go for example, something that is really optimized for AI and is actual storage on a decentralized storage. I think this is my list of all the decentralized storage opportunity. So yeah, MDT, if you look at the chart, it held really well in the last bear market. So that's something I'll look into. Jackal on Cosmos, that's interesting. Shadow is on Solana, that's interesting. Uh, yeah, I think I have to continue digging into this, but there's a lot of opportunity here for decentralized storage, and storage is one that keep being told to me that it's one to look at. So we'll see. But Blue Zell and
Yeah.
AOS did really well. Trust also, LF. there's lots of familiar name here that I have to dig deeper or weave also. So it will take me time to go to that much and compare in terms of potential optimization for AI.
So moving on, we've got we touched on Toncoin, we touched on Filecoin. Now, Binance, you have on here. You're still looking at them. I mean, is Binance almost like a sleeping giant? You know, there's obviously that the
Uh,
momentum has been taken out of its wings right now with
yeah.
what happened with DZ. But I mean, do you feel like they can recover?
Uh, yeah, I mean they'll survive, but the thing is that Binance is losing market share all the time nowadays. So it's not just the centralized exchange, but the decentralized exchange as well. So personally, I would not put money in the BNB itself, but I just want to keep track because it's still a chain that has a lot of the very early stage project that are more like degen type of investments. A lot of them launch on Binance and some of them scale like crazy. So I just want to keep track of the chain, but I'm not sure I'll put any allocation there. And the thing I had
You,
put CDFI or the GameFi, but the thing
yeah, you have a launch pad here as well.
yeah, the thing CDFI is a launchpad for GameFi project, but the thing is that what I'm fearful a little bit is that the AAA game will they allocate money into a launchpad? I'm not sure because if they raise the $50 million from VC, I'm not sure they really need to go through a launchpad. So it's possible that the project in GameFi that will launch on CityFi are all non-AAA games. So that's kind of my fear that it may not do as well if the AAA game just bypass it entirely.
I mean, if there's a very strong market for games that are just low quality, but they're getting a lot of business, so
Yeah,
technically, just because they're catering to games that are lower quality doesn't necessarily mean that they can't be successful themselves, right? I mean,
yeah. I
it's
expect
like
them to grow, that's for sure. But
right.
I expect that it might not be as high as people assume to be, simply because the AAA game that will attract the millions and millions of users might not launch on CityFi itself. But the thing is that the
Yeah.
low quality game can attract users, but usually it doesn't sustain. That's the problem. So
And lastly, here, Patrick, you have USDT as well, so you're trying to keep some cash on the
yeah.
side, but you have Bitcoin. Interesting, you have Bitcoin, but nothing to do with like say OrdFi or ordinal NFTs. Are you not buying it right now? No pun intended. Like, are you just not
Uh,
not sold on the tech?
no, it's just that the NFT narrative to me is not interesting. It's interesting in a gaming perspective, into a identity perspective. When there's a real utility behind the NFT, then I'm all for it. But when it's just a monkey with a cigarette in its mouth, I have zero interest in that kind of stuff. So that's why Ordinal, it's not something I care to get knowledgeable and yeah. I know it will scale, but to me it's too high risk. And if you're not an insider, it's too heavily manipulated by the market. It's kind of like investing in meme coin. I usually don't do that. So
Yeah, right now there's a lot of financial tools and solutions coming out to be able to trade, right? Like NFT perpetual DEX, for instance, where you can trade the
yeah,
price of these NFTs and who knows, potentially maybe like real world assets. So I think that right now we're playing around with monkeys, but I think if you kind of look underneath, the underlining message here is that you're taking assets, converting them into a digital asset, and then creating financial instruments out of that. So I think that we've got some room here. But NFTs, I think are here to stay. And
yeah,
look, I think the same way people appreciate art, people have an appreciation for Bored Apes and all these NFTs. I don't think they're going away. I think that if anything, 20 years from now, when we have real use cases for NFTs that are not around art, we'll look back and look at these old school NFTs as extremely valuable. And to
yeah.
your point, I don't really quite understand it, so I don't dabble as much in it as well. I have an appreciation for those that do, but I'm with you on that. I have very little NFT involvement, more just to understand how the technology works, but not so much as a hobbyist.
Yeah,
But
yeah, I have a good use case of NFT as well. But the thing is that it's not liquid. It's like if you buy a house, you need to find a buyer yourself to resell it. So in a bear market, that can be it's like if you own a really expensive diamond, that doesn't mean that it's easy to resell. You need to find a
yeah,
buyer, as opposed to all of the token stuff that is tradable. It's very liquid. So that's the idea.
absolutely.
And if I can summarize a tiny bit the strategy as it evolved over time, just in case it was not clear before, but this portfolio is a early start at the beginning of the bull run. And I think I intend to use a bit of leverage in some, for example, Ethereum, Bitcoin, and I put a bit of leverage on Injective, but that is much more risky. And the other one is Caspa that I use that as well. But the thing, I would use a tiny bit of leverage, not too much, to increase my returns. But ideally, I'm thinking that with the $25,000 capital investment pretty much now, I think it's entirely possible that with a tiny bit of leverage, we can achieve about $1 million of capital in a year and a half. Obviously, it's a bit more risky, but I think it's achievable. There's new millionaires at every bull cycle. And the real challenge is to make sure that once you get to that amount of capital, that you don't lose it all in the next bear market. Especially, all of the leverage will be moved out. I will not take any more leverage probably by the end of 2024. And then I'll start to take profit and convert into real world assets, into US currency, a portion of it, and things that have nothing to do with crypto at all. And this way, I have some revenue stream so that when the bear market is at the bottom, I can move back into crypto for the next cycle. And I think what's not impossible is that Bitcoin and Ethereum, because of the ETF and the new gap rule, might not dip that much. So I will probably retain some amount of capital in those two, and potentially Solana if it get to an ETF level also. Right now it's not SEC compliant, but I think it's not impossible that the Solana Foundation could basically settle with the SEC, and at which point then it would be cleared to become an ETF. I think it's entirely possible that this could happen. So I would not exclude Solana from having its own ETF at some point as well.
Attention builders, if you're building an application, an exchange, a chain, and you want to be part of a thriving Web3 community full of professionals, be sure to go to networkspotlight.io and apply to become a member. We have over 400 members with bi-weekly events for you to keep up with the industry trends and meet the most influential people in the space. Also, be sure to check out Patrick's full article about his portfolio on Medium. And if you're interested in having your project get a tokenomics review, be sure to fill out the form so Patrick can get in contact with you. All links are in the description. Catch you in the next video.